is back. He's the CEO of Sprott U.S. Holdings. Good to have you back on, Rick.
It's always a pleasure, Danielle. Thank you.
It's a regular appearance.
Should be more regular.
More regular, yes. Now Trump victory, but everyone was really expecting gold to take off to 1,400. That hasn't happened. Now what? What are we going to do without the political drama, Rick?
Well, I always thought the political drama was irrelevant, irrespective of which moron won. The truth is, I don't think it matters. I think what matters is the deficit. Both of them would spend, and negative interest rates. The two things that matter are a $20 trillion on-balance sheet liability in the United States, growing by $1 trillion a year, quantitative easing, which you and I would call counterfeiting, and negative real interest rates. Trump is irrelevant. Hillary was irrelevant. It's the way people feel. What really matters is the arithmetic, not the way people feel.
Well, he has said that he would replace Janet Yellen.
Yes.
Okay. So there definitely will be a change in the Federal Reserve, which obviously has a lot of power and influence over gold. Mm-hmm. So how do you think that could be a game changer, and where can things head in 2017?
Two comments. The arithmetic supports gold, irrespective of the narrative.
Okay.
Secondly, at my age, I've come to understand that you can tell when a politician is lying when their lips are moving, irrespective of the party. What Trump says he's going to do and what he actually does will be at substantial variance. But it doesn't matter. It's the deficit, it's negative real interest rates, it's the unfunded liabilities. That matters. Time is on gold's side, irrespective of Trump, irrespective of Yellen, irrespective of any of these other gangsters.
Now, you've also said that gold and the U.S. dollar should continue to move in tandem. You're sticking to that.
Happens very rarely, but despite the fact that the U.S. isn't a very good credit, it's better than the other credits. That means that maybe €1 trillion will come to the United States next year.
Yep. You were also on a panel this morning with two people very familiar to the industry, Doug Casey, David Morgan, on a panel called Mistakes I've Made. I love that title. So tell me, what's one of the biggest mistakes you've made?
Well, the biggest mistake I made was at the beginning of my career in the great bull market of the 1970s. Everything was going up. I was a young man. I wanted to believe in myself, and I believed that the bull market had something to do with my brains. I thought I made money because I was smart. Nothing, of course, could be further from the truth. The second mistake I made at that point in time is that I forgot that markets work. Very high resource markets constrain demand because of substitution, and they increase supply. Think about what happens when supplies increase and demand decreases. Bull markets are the authors of bear markets, and bear markets are the authors of bull markets. The first and seminal mistake I made is that I forgot that markets work. The cure for high prices is high prices. The cure for low prices is low prices. If you understand that phenomenon, you will be a good natural resource investor. If you are not in our business a contrarian, you are going to be a victim.
Now, the past 5 conferences that we've been at, and I'm not sure if you agree with me, the sentiment has been very bullish for gold. Mm-hmm. People have there's definitely a renewed optimism. So if we're sticking to this lesson, should we be backing away from gold now?
Well, certainly we backed away in the summer from the junior gold stocks because they were getting overbought. We couldn't invest in any new names because the terms weren't good. When you can't buy, you must be a seller. My belief is that gold is sideways to down for the next 3 months. So we're beginning to aggressively deploy into gold again because it's less popular. Now, the truth is, with regards to gold, the sentiment is a near-term phenomenon. The longer-term phenomenon, from my point of view with regards to gold, is that gold is increasingly attractive relative to alternatives like the U.S. 10-year Treasury.
All right, Rick. Well, finally, is there a message that you'd like to really share with investors here at the summit?
Yeah, a whole bunch. Pay attention to arithmetic. Forget the narrative. Forget your own self-reinforcing story. The truth is that money is made in the delta between perception and reality, so figure out what a company's worth before you worry about the share price. If you do that, time is on your side and you'll make money. People who trade stories lose money.
Okay.
People who trade stories, realities make money.
Okay, so how can we dive into that? How can you really see the true worth of a company?
You and I will do a long Kitco expose on that someday.
Because that's what I want to learn.
It'll take 45 minutes.
Okay, so in 45 minutes we could learn it?
Absolutely.
Okay, we're going to do a segment on that then, right? If that's where the truth lies.
Daniela, I'm on this like white on rice. We'll do a big educational
so
sector.
Stay tuned for that. Rick, well, thanks so much for joining us.
Pleasure.
And thanks for watching this conference coverage from the Silver and Gold Summit in San Francisco. We'll have much more for you, so be sure to stay tuned to Kitco.com. Thank you, Rick.
Thank you.